part of me, Scott, just thinks this has just been a tough February, and it makes people feel like it's a bear market, and we're down 1% for the month. I think March is going to be a turnaround month for the better.
The narrative about Bitcoin as digital gold is very real, is very important. It's not going away. It doesn't matter that gold is up and silver is up in the last 18 months, exponentially, and Bitcoin is down. Over the long term, of course, Bitcoin has dramatically outperformed gold. I have both. I believe that you should have both.
A central theme in Lee's analysis is the divergence between market sentiment and real economic indicators. He characterizes recent volatility not as evidence of economic contraction, but as a growth scare driven by risk repricing rather than deteriorating fundamentals. Lee also highlights the tendency for investors to perceive modest declines as major regime shifts. He notes that even a relatively small monthly decline can feel like a bear market when uncertainty is high. Before we go on, please take a moment to like this video, subscribe to the channel, and turn on post notifications for more content like this. Every action helps with the YouTube algorithm and greatly supports the channel's growth. Thanks for your support and enjoy the video.
It just shows you that AI is everywhere. And it's in the conversation everywhere within governments, within this market. Market doesn't seem to know what to do with this trade from here. It's just nervous all the way across the board.
Yeah, that's right, Scott. I mean, we know AI is improving at an exponential rate. There's a lot of spending associated with AI. And of course, now we're uncertain, like the path that it takes, whether or not it's actually a net positive for the economy. I think investors are losing sight of the bigger picture, which is that when it comes to the global implications of AI, it's really just the US and possibly China as the two real creators and beneficiaries of AI. And I think ultimately that also means that the S&P 500 should be a net beneficiary. So I think a lot of the angst we've seen this month and a lot of the research and a lot of the people pointing to how there's downside scenarios for AI, I mean, a lot of that is just guesses, but to me, I think it's also overly pessimistic.
What do you make of Nvidia's tough week? You couldn't ask for a better earnings report, one would think, and yet the stock's been miserable.
Yeah, I mean, I'm disappointed to see the stock not stronger off those results. I mean, how many companies can get 60 billion in revenues, guide to 70 billion in revenues, and that's up over 70% year over year and 100% growth. The PE of Nvidia now is at 19 times forward. So I think this harkens back to many times where Nvidia's price consolidated for periods of time and then it re-rated. I think this is what it's going to prove to be. I don't think the visibility is any lower. And does it make sense that Nvidia should trade now at half the PE multiple of a lot of consumer staples like Costco, which trades at almost 50 times earnings?
Tom, how are you thinking about credit, the way that spreads have widened, the financials are trading terribly, not even to mention the private equity and private credit names. Some see broader risks out there. What about you?
Yeah, private credit has been percolating as a problem for some time. We got some signs last year about this, and I do think it does affect those who are invested in private credit. It does also argue the Fed needs to be thinking a lot more about where interest rate policy is. I think the good news is today, after the PPI report, the number of implied Fed cuts actually increased this year from 2.1 to 2.4.
I mean, yes, rates are down, spreads have widened. It's, people are talking about growth scare, that we've reached that realm of market nervousness. Is that what this is in part today?
I mean, part of me, Scott, just thinks this has just been a tough February, and it makes people feel like it's a bear market, and we're down 1% for the month. I think March is going to be a turnaround month for the better. I don't think the economy is slowing. In fact, if you look at things like rejection rates for trucking, it actually points to the economy probably accelerating. So I think if there is a growth scare, it's really just more of a risk premium than it is companies actually delivering news that would scare you about the economy.
Across modern financial history, moments of profound monetary transformation rarely appear obvious in real time. They emerge gradually through shifts in policy, capital flows, and investor psychology. In this context, macro investor Dan Tapiero offers a framework that connects traditional safe haven assets, digital scarcity, and the evolving structure of global capital markets.
As you know, I've always been a gold and Bitcoin guy.
Yes.
And I have my physical gold business that I launched in '09 called GBI that's obviously thriving now. But let me just tell you, for years, that business flatlined. And gold was trading 1,500, 1,800. And I had the debasement thought post '08. Okay, we're going to have negative real interest rates for a long time. Oh, I'm going to have some physical gold. Hey, why don't I start my own company? And now we're the third largest vaulter of gold in the world outside of the banking system. And the AUM has exploded. It's been wonderful. But my coming to Bitcoin was through that gold business. We integrated in 2012 with this firm called BitReserve, which today is the Uphold wallet. And still today, you can go on Uphold and buy and sell gold to buy or sell Bitcoin or Ripple. And that was a business we launched with them in 2012. So why mention all this? I think the narrative about Bitcoin as digital gold is very real, is very important. It's not going away. It doesn't matter that gold is up and silver is up in the last 18 months, exponentially, and Bitcoin is down. Over the long term, of course, Bitcoin has dramatically outperformed gold. I have both. I believe that you should have both. I think they serve different roles within a portfolio. A little too complex to get into with only 2 minutes, but the markets always are going to cause the most amount of pain to the greatest number of people, and they're going to, at the moment where the market says, "Oh, Bitcoin is no longer digital gold," then all of a sudden, maybe Besant decides he's going to add a little bit for the reserve, and then it's all of a sudden it is gold again, or whatever it is, whatever the narrative. But the characteristics that we've talked about at this conference over the years on our interviews about sort of the pristine collateral aspect of Bitcoin is still there, and at the core of the whole ecosystem. And in terms of macro moving around, look, I think the Fed Chairman Powell, he's definitely not a criminal. I think the whole Trump attack is really misguided, but he is a very bad Fed chairman. He was
no disrespect,
the worst that I've seen in my life, and I think if you talk to someone like Scott Bessent, who's a macro guy like me, who worked for the same guy that I did, and I think quietly he would probably say the same thing, not in a public venue. Kept rates too low for too long, and then overhiked, and then left them too high for doing. And now, it's been clear the employment situation here has been, I call it, quite dire for the last year. And with those revisions yesterday, the rates are just much too high, given where the underlying economy is, where employment is, and also what the capital needs are of the country right now. And I think this is another very important part of why we've had this correction in crypto. It's just that, you're having a company come out with a $1.2 trillion IPO. You've got AI, robotics, space, all these other things pulling capital away from crypto. That's okay. But we're feeling it because there isn't enough liquidity out there because policy is too tight. And so I suspect the dollar keeps going down. This is, the Bessent's essential policy, even though he won't say it. And I think this is going to be very bullish for us over the medium term, gold and Bitcoin. And it started in May of 23, or I think it was June, when Larry changed his mind about Bitcoin. I think that was sort of the beginning of this bull phase. He really kicked it off. And then the launch in January 24 of all of the ETFs, frankly, was definitely a legitimizer. I think the big change now is that Bitcoin, and I think to some degree ETH as well, maybe not quite Solana, maybe Solana too, but are really considered established assets that now must be considered within an asset allocation model. And I think, when I did this event, I don't know, 2 years ago, or I did it last year, 2 years ago, it was still a question mark whether, it belonged in the portfolio. And I think, Now, of course, with some of these companies, the DATs that are owning Bitcoin, plus some of the IPOs, plus the successful ETFs, I think there's really no doubt now that Bitcoin is an institutional asset. And so we wanted the institutions to come. They're here, and now the price is cut in half in 4 months. The sophisticated investor and the world that I used to be in, the hedge fund world, is very aggressive, very smart, very intelligent. And once an asset has the liquidity of an institutional type asset, they are very happy to short as well. And they're aggressive shorters. So when you see hedge fund performance sometimes do very well, as they did in January and let's say in Q4, they're on both sides of the market. So it's not like be careful what you wish for. I think we broadly as a space have won, right? But along with winning comes some other things that maybe the crypto native guys aren't so used to, which is a very aggressive investor base who are on both sides. I try to stay away completely from venture because it's in our space, it's just too difficult. Mm-hmm. We've invested in 24 companies at the growth stage. We're looking for companies generally with 50 to 100 million in revenue or more. We don't have any liquid token exposure at all. I think there are complications now as to within the space, where does revenue actually accrue to? Does it accrue to a token? Does it accrue to equity? There was a problem a few months ago with Aave. And so even projects, and I consider everything except Bitcoin, ETH, and Solana as a venture project on the token side. And on the business side, anything sort of, as I said, south of 30 million in revenue or so is venture. And so we've invested in 24 companies, 10 board seats, 2 billion AUM. And we just had a first close on our 5th fund that was pretty significant. And, eventually, we'll have a few more closes. I'll tell you the one thing is it is still remarkable to me that, as far as I know, we are the only growth fund exclusively focused on crypto, blockchain, Web3, digital assets, however you want to call it, the digital asset ecosystem, of which Bitcoin is the core of. And especially now with the growth in stables and RWAs and all the explosion in poly market and prediction markets, all of these perps, all these things, the overall digital asset ecosystem continues to grow, and the companies that are building that world, that's who we're investing in.
According to Dan Tapiero, the convergence of monetary debasement, institutional adoption, and expanding digital infrastructure positions Bitcoin and related assets within the core architecture of modern finance. Volatility in this context is not evidence of failure, but a byproduct of integration.